Welcome to Bears Beats Business, a complete stock portfolio for Dwight Schrute. Okay. About our client, Dwight Kurt Schrute III. He's 52. He is approximately retiring at 75. He is a regional manager, bread and breakfast owner, farmer and property owner, and his estimated net worth is $10.5 million, according to a YouTube video I found. So, one of his first investment opportunities is a ETF bond that this would help diversify his portfolio because he would basically, this is a corporate bond, so he would take money that he is making from those businesses, those smaller businesses that he has, and kind of putting it towards this company that invests in other companies. So it has a 1.5 yearly return, which is pretty small, but it would kind of help broaden his horizons, I guess. And also it has an expense ratio of 0.28%, which means it's a very stable company, which means it is probably pretty reliable. Second opportunity is a Roth 401k. A Roth 401k differs from a 401k because you are not, the money that you put in is not, or is taxed as soon as you put it in. Unlike a 401k, it's not taxed, but then you are taxed when you take it out. Roth 401k is the opposite. So you are not charged taxes when you withdraw it later. So, because he's retiring pretty soon, I think that investing in this kind of 401k would be better because I don't think that, I don't think that tax rates will really increase in the time that he is retiring. And also because he's over 50, he can put up to $27,000 a year into this 401k as opposed to if he was younger. A third opportunity is a stock in the company Amyris. It's a company that sells ingredients and scents to other companies, and they are also possibly one of the biggest pot stocks that might be up and coming. It has a 43% increase, which is pretty good. And also Dwight is a hemp farmer, so he probably knows the ins and outs of the business. And there's also been a huge spike since the coronavirus outbreak in March, and things have only increased. Another stock opportunity is to invest in Tesla, who has many exciting things coming. There's possibly a movie in space, and also a new car model coming up soon. There's a 7.56% increase, and there's also just a really solid company in general. I think they do a lot of good things. The last investment opportunity I have for Dwight Kurt Schrute is a mutual bond in a company that invests in other companies. So this is a no-load bond, which means you aren't taxed on the money that you initially put into it, which is pretty cool. And this would help diversify his portfolio because this is a company that focuses on very, very large companies. And it has a 0.78 expense ratio, so pretty stable, and also it's growing. It's 0.8% increase, which is pretty neutral. Now for his risk assessment. Investing in stocks always comes with a certain risk because, things are unpredictable. But the market is overall on the rise right now, so that's pretty something to look forward to. And as with his 401k, that is definitely something that he should invest in now because he is retiring soon, and even though he has $10.5 million, it is always nice to have a retirement fund just in case. So Also for the mutual bonds, I guess his corporate one kind of risks the success of his companies, but because they're kind of small, he has a lot of money that he can easily build himself back up again. And I would say that this is not a very aggressive portfolio for Dwight. I feel like if he wanted to be a little bit more aggressive, he could definitely check out more property investments and etc. So, yeah, this is my Bears Beats business stock portfolio for Dwight Schrute. Yeah, have a nice night.